Hey, what's up everybody? Welcome to Forex Analysis. It is Sunday the 15th of April and it's 9:22 p.m. and we'll be looking at three different pairs today. But before we get started, quick risk disclaimer. So foreign exchange trading carries a high level of risk. Before you decide to trade foreign exchange, we encourage you to consider your investment objectives, your risk tolerance, and trading experience. It is possible to lose some or all of your initial investment, so don't invest money you can't afford to lose. Seek advice from an independent financial or tax advisor, and all information provided is for educational purposes only and should not be construed as trading advice or counsel. So the first pair that I want to take a look at today is the euro. This is hourly chart. And we have broken below the 200 and 100. We had a pretty strong move over the past hour or so, especially for a Sunday. We had a gap a little bit lower, and we've proceeded to move down about 40 pips. So this is a pretty unprecedented move for a Sunday, and I'm not going to put too much cloud on it as of now. But usually you don't see moves like this on a Sunday, so whatever that means, if you have a reason to accept or reject my hypothesis for this video because of that, then go ahead and do it. But I'm not going to put any cloud on it for now. But right now what I do see from the euro is an extremely oversold condition. We have RSI currently at around, the lowest it was, close was at 16. So that's really low for the RSI. If anybody here follows the RSI, you know that it doesn't usually go below 20. But since we do have a push below, we are in extremely oversold territory right now. So a lot of times in sell-offs, people tend to sell a lot more than they go long. Destruction of money happens a lot faster than the creation. So if we are in an uptrend, it usually takes a little bit longer to get to levels, and if a downtrend does happen, it happens a lot faster than you think. That's one thing that's really prevalent in my trading. So right now we are in very oversold conditions, and my bias is going to be the long side, just based on the fact that sellers have been in the market and buyers will start to step back in. So that might not happen around this level, but if I want to define my risk, I'll start looking at certain percentage targets. So depending on how much capital you have, I'll be looking, usually I look around 50 pips to the downside, so we'll estimate it to be around 1.2973. And if we do push down to that level, the probability of moving higher is even stronger. So placing a trade that's even bigger than the one that you're in now doubling down isn't always positive. So you could set a really tight stop loss and then look to re-enter later. But that's one strategy that I like to implement in these extremely oversold markets, because the probability of moving higher is just so much more prevalent. And so this is going to be an extremely good move. It's a good thing for the euro, and because especially that the euro is so oversold, that'll help me to trade the other pairs. So if you look at a lot of the other pairs, with the exception of the Canadian dollar and I think the yen, we are in overbought or oversold territories. So one of those is the Swiss franc, which broke above the high, closing higher here at 0.92135. That was set back on the 5th of April. So this is a pair where buyers have been in the market, and if you study waves, you know that pullbacks happen, and pullback is likely to happen for the Swiss. So if you are extremely bullish of the Swiss right now, which I expect my bias to remain bullish for this pair, but for now I think that move to the downside, possibly back to the 100 and 200 moving averages, is around a 60, almost 70 pip move. So those are going to be extremely good levels for defining my risk if we get back down there. But for now, my bias is going to remain to the downside, just based on the fact that we are so overbought for the Swiss. So a couple levels I'll be looking at is certainly the close here at 0.91909. If we do start to break back below that, then first of all, I'll be in a profitable trade, and second of all, my bias to the downside will be confirmed. So that is just one level I'll be looking at for the Swiss. But like I said, in these overbought and oversold territories, I like to look a lot at marginalized risk. So I like to look at percentages and what percentage of capital I can afford to lose, and that's the way I like to trade. So again, I'll be looking around probably 50 pips to the upside, which is more than it seems with these strong moves. 50 pips to the upside would be around, these are all estimates, around 9.9281. Yeah, so that's my thoughts on the Swiss franc. The other pair that I want to take a look at is the New Zealand dollar, which I've remained pretty bullish on. I like right now, just based on the fact we're not extremely oversold right now. We are in oversold territory, under 30. So we have had a small push to the upside so far. What I do really like to see is definitely the bounce off the 200-hour moving average, which is going to be huge. That'll allow me to define an extremely tight risk zone, around 20 pips at 0.8185. So if we do break back below that, my stop will probably be triggered, and I'll look maybe to buy in again lower. So it all depends on what we see from the New Zealand dollar, whether this is just a strong move on a pullback or if we are beginning to push to the downside. But the setup for the New Zealand dollar does look very good right now, just very technically. RSI is in an uptrend, price is in an uptrend, and we are just above the 100-day moving average, which will act as support. So a lot of support for the New Zealand dollar right now. And if we do start to see a push from the euro to the upside, people will be looking to buy this pair a lot, just based on the fact that technical traders and fundamental traders are going to be lined up. So big moves in store for all of these three pairs, as well as even the Aussie and the pound are good pairs to trade this week. A lot of the majors are going to be in for a pretty big week, and I'll be looking at closing higher and closing lower and seeing if the allocation of resources are beginning to be switched by traders and investors. So I want to take a quick look at any news coming out this week. 8:30, we have core retail sales out of the U.S. as well as retail sales, TIC, and monetary policy minutes. So for the Aussie dollar, definitely a good news break day. I'm kind of skeptical on trading policy minutes just because it can be so volatile. So that's one reason that I didn't want to look at the Aussie today. But yeah, good numbers out of the U.S. could push the pairs in one direction or the other, and a strong move in one direction could just be a small correction. So definitely things I'll be looking at this week from these three pairs. If you want to follow us for more updates during the week at SynergyFX, feel free. And thank you very much for watching. If you watch all of these, thank you very much. I hope they've been following because I've been doing relatively well. So yeah, like I said, follow us at SynergyFX, and thank you very much for watching. Good luck trading.